All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day today. It is Friday, as always, bringing that Friday energy to you guys. We're rounding the bend in November. We're coming up to Thanksgiving, so I'm getting excited for that. It's a good day for a second reason, though, because we have Lauren Brychell with us on the podcast. She is from Equity Elevated, and her sole focus is raising capital for deals. Raising capital can be one of the most difficult parts of getting a bigger deal done, but it is a very important step, and it's something that everybody who aspires to a larger portfolio to grow their business, you really do need to master this. So it's a very important topic. So I'm super excited to jump into this. Lauren, thanks for hopping on the show.
Thanks so much for having me today.
Absolutely. I told you before we got on here, we always like starting with stories and hearing how people got to where they are today. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Absolutely. So my story started sort of earlier on in my childhood. My parents were always buying homes, kind of flipping homes, and they were quasi real estate investors. And so that really piqued my interest early on. And I was pretty lucky to jump into the real estate industry full time about a year after I graduated college, just kind of by luck with a newer firm. I was their second employee, and I was able to really help from the ground up on the marketing, capital raising side of the house, which was a blast. And I really just kind of got lucky and worked for a large storage operator, and the rest is history. I love this industry and don't ever plan to leave.
Nice. I love it. Large storage. So your main experience in raising capital has been for storage facilities.
Yes.
Nice. Is that you're from Spartan, right?
Uh-huh.
Yeah, okay. I've had conversations with you before, so that makes sense.
Yep.
Great. So you have a lot of experience raising capital, mostly on the storage side. As I mentioned in the intro, I feel like raising capital is one of the most important and most difficult things to kind of master when you're really trying to grow a portfolio. And so I want to kind of break this conversation down into buckets for people who are at different stages of their career. There's the first deal that you do. It might be you're buying a $1 to $2 million property. You have to raise, $200,000, $300,000, smaller amounts. And then you start to grow. You're getting bigger properties, 1 million, 2 million, 5 million, $10 million properties, and the amount that you have to raise grows with the purchase price. So let's start at the beginning for the people who are just starting to raise capital. Tell us what strategies you put in place to just first start with your first deal, your first raise. What are the advice that you give investors to start their raise?
Yeah, absolutely. Starting the raise is an exciting and scary time because you're like, okay, I'm going to go buy this deal. I might have a couple of friends, family members, colleagues that would be interested in putting some money in, but how do I get started with asking? How do I put the deal together? What kind of things are these investors going to be looking for? So I would say start by really honing in your numbers, your pro forma. It's not going to be a crazy elaborate pro forma on your first deal. Most likely, you're not going to probably have an investor portal and all the fancy marketing materials, but making sure that your numbers are good, they're conservative, and it's something that you'd be okay with pitching your grandma. Start there and then start small, right? So until you have a couple of deals under your belt or some sort of track record, you most likely will be staying in that friends, family, colleagues. Maybe you'll pick up some investors at some local networking events or something like that in your area. But just keep the expectations lower on that side of things. You're not going to go grab a family office on your first deal. And then the other important thing to remember is you're not asking for money. You are providing your friends, family, anybody else who would invest an opportunity to diversify their portfolio and grow their wealth into a great deal. So kind of shifting your mindset to that versus, oh gosh, I don't want to go ask my friends and family for money. That's so awkward and embarrassing. You shift that mindset, that'll help make it easier.
Yeah, I remember the first time I raised money, and even though I knew it was a good deal, I still it just yeah, I had such I was very nervous about presenting it to my family, and just I felt like I wasn't doing the right thing, and all these emotions come up when you're presenting a financial product essentially to your family. So it
Yeah.
is difficult to get through those first emotions when you talk to your clients? How do you coach them through that?
Yeah, so I kind of help them exactly on that front. Hey, you're not asking for money. You've got a great opportunity that you're investing in. You're putting all this risk on the table and you're offering them a way to grow their wealth, to bring in cash flow. If you're doing a development deal, to double their money, hopefully over 5 years, whatever that might be. And so we talk a lot through that. We talk a lot through what that first kind of pitch or call should look like. And it's really getting to know these investors, getting to know their goals, what they've invested in, how knowledgeable they are around this, and tailoring the conversation from there to make them feel comfortable, to make sure they're educated, and kind of going down the line.
And when it comes to the actual conversation about their return, do you usually, because things like IRR don't, I found in conversations it doesn't really land with anyone. So
Yeah.
what are the metrics that you generally suggest people use when, because people want to know, how much money am I going to make? And they don't use numbers like ROI or NOI, IRR, all these things. They like things like, oh, I'm going to get $500 a month, and then in 5 years I'm going to get $60,000 or something like that.
Yeah, exactly. I like to keep it really simple. If it's a cash flow deal, talk about the cash flow that they should be receiving, maybe on an annual basis, and then divide that down into monthly or quarterly payments for them. Make it really easy to understand. Talk about the average annualized return, because most people can get that because they're probably comparing the return on investment for this deal to their stock portfolio or their CDs or whatever else they might be investing in traditionally. So trying to make it as apples to apples as you can to their average annual return on their stock portfolio. Or something else that's pretty easy to grasp is an equity multiple. Hey, if you put 100 grand in, we're going to return you 200 grand ideally at the end of this if everything goes to plan. So that's a pretty easy one for folks to grasp. And if they want to dive in further, hey, here's that double your money. We're going to break that down over the 5 years, and this is what it looks like per year. I think having a graph written out on this for an average investment size or maybe the minimum investment size is really helpful from a visual standpoint to begin with.
And do you ever talk about tax implications or anything like that, or is it just the return on investment?
Yeah, I think it's good to talk about tax implications and even tax benefits, but keeping it really high level and keeping the liability off yourself, saying, hey, here's a potential tax benefit for you. You may not be able to take this because I don't know what your situation is. Ask your CPA, give them this information, and let them coach you further through it.
Cool. I love it. All right. So new investors, they're going to their friends and family. They don't have a track record. And then they start to get deals under their belt. They close some deals. They perform well. Now they're looking for larger sums. How do you scale from those first couple of deals, having that track record? How do you scale into the larger systematized raising capital?
Sure. So this is where I kind of come in and help a lot of different clients is at that point, you're ready for a real investor portal. You're ready for a real CRM, like a HubSpot account or something like that. And you need to get some systems and processes in place so that when you're bringing in leads that aren't friends, family, colleagues, people you have a way to get to know them, to build that relationship more in a systematized way versus just going off the cusps, making sure that you're writing your notes down, having an automation, a marketing campaign built out so that they're keeping top of mind throughout either deal launches or last time you talked to them. So really creating a system that's more robust, because once you've gotten to that point, you're not only way busy on the deal side, the acquisition side, the operation side, but now you've got to worry about, okay, now we're raising capital, we're bringing in external leads. We need to be going to events, more networking events, conferences, whatever that might be to ramp up that lead pipeline. And then they all sort of flow together from there. But I say at that stage, it's important to start investing in some of those tech stacks to really start polishing yourself externally. So making sure that your website is something that you can compete with any other sponsor out there, making sure that your pitch decks are really, really professional and they're showing the right information and everything's accurate and up to legal standards and everything else. But at that point, once you really start going external, it's important to get your game together and start polishing yourself.
Yeah, I ironically, the pitch decks are the things that I just hate putting them together, and I have not found a good somebody who can do it well, who understands exactly the numbers and who can put the deck together well. And so that's been kind of a hiccup for me, or a struggle point. I just hate sitting down and like going through every single deck because PowerPoint is my nightmare, and I just hate PowerPoint. But
Yep.
that's another thing. All right, you already talked about events, so that was one thing. The next question that I have is, how do you find the people who are going to be investing in your product or projects? Your family, you've exhausted those, so now you need to reach out and you need to start getting into people you don't know, people who are in your professional networks. You probably are creating an avatar for the person that you're going after. How do you coach people to actually find those people?
Yep, great point. And I was going to say it starts with figuring out who your investor avatar is. Obviously, you can go out and market yourself and your firm to the wide, community of every different piece of it, but it's really important to hone it in because you're going to be looking at your marketing strategy, your messaging, everything else that goes into that. So some clients or some folks out there who are looking to pick an avatar, pick doctors and lawyers, or they pick doctors specifically because they used to work in that arena. Some pick tech workers because they live in the Seattle market and they know the tech space really well. Maybe they were a former W-2 tech employee, so they understand how to communicate and talk with those folks and pass those investments along over the fence. Some people only want to look for family offices. So you're marketing and building relationships in a completely different way with family offices than you are, a high paid
And
W-2 tech employee.
explain family offices.
Sure. So family offices are extremely high net worth families that usually have a team of investment professionals overseeing and choosing their investments for them. And they're harder to build relationships with. It's a really long period where you're going to be building that trust. They're going to be doing a ton of due diligence with you and on you before they actually place capital with you, but usually it's a larger check size. So, but that's like, again, a totally different arena. So really honing in on your avatar will be important to decide which events you should be going to, which conferences. If you're going on podcasts, which ones are you going to guest host on, right? Because if your avatar again is engineers and you're going on passive income MD or something like that, you're not talking to the exact avatar that you're looking to hit. So it'll really help with messaging, events, where you're spending ad dollars, everything else once you've got 1, 2, 3 personas picked out.
Oh, okay. That was actually going to be my next question. How many personas, how many avatars do you suggest people hone in on? Do they, if let's say they have no background in a specific profession, like nothing, and they didn't work in tech, they didn't work as a doctor or a nurse or whatever, and so they're really just kind of choosing something out of nothing. Do they hone in on one, master it, and then add a couple more? Is there a maximum that you suggest, or how do you suggest people build or decide on that first avatar, and then what's the total number that they should be shooting for?
Sure. I would say 5 or less avatars is ideal. You really don't want to make it too broad. Usually you can have an idea of one off the bat, and whether it's, hey, I've been doing real estate forever. I don't have another profession or something else that I can pull from, but it's, hey, I only want investors in my market so we can walk the deals together and everything else. Then you're hitting accredited investors in the Denver market, for example. And then you can bring in, okay, I really like working with these guys, but I also, since I'm a business owner, I also love tailoring to business owners. And then you can, add a second avatar of small business owners. So I would say 5 or less, but you'll kind of also fall into which avatars are coming to you as you go along. So you're going to pick a couple off the bat, and then naturally a couple other groups will start to find you and follow you organically.
Makes sense. So once you've decided on who you're going for, how do you kind of build out that funnel? Well, actually, is it all face to face that you suggest, or you mentioned ads before, so you run ads to a landing page, to a drip funnel, and all that stuff, or how do you coach people to build out their funnel?
Yeah, that's a great question. There are so many different things you can do depending on your time investment, your capital investment, everything else that you have going on. So you could focus just on face-to-face events. I think that is going to be a lot of the future. It's harder to raise capital recently. It's especially harder to build trust from an online advertisement. So the more face-to-face you can do and the more referrals you can bring in, the better. So I always recommend that: hosting property tours, hosting dinners, asking your investors, your leads to bring in a referral or two that also might be interested, and kind of growing from there. But if you're like, hey, I don't have the time to travel, I don't have the interest, let's just focus all online, you can use LinkedIn, ads, Sales Navigator, Facebook and Instagram ads. I mean, there's a ton of different ways you can go, and you could really go crazy on ad spend online, or you could go on just a webinar train. You could really be the thought leader in your space with frequent webinars, educating investors and bringing new leads in from there, as well as posting on online forums such as Bigger Pockets, Path of Pockets. I think that's the new one there. Reddit, even, different places that you can spend time and just figuring out what your strengths are. If your strengths are writing or going on podcasts or hosting webinars or in person, it's going to tailor it from there. So,
Yeah, that makes sense. And so is there any specific recommendations you can give per asset class, or is it pretty much the same regardless of what you're raising capital for?
I would say there are a lot of similarities across all asset classes. I would say things that are a little bit more alternative than your traditional storage, multifamily, could use a little bit more on the educational focus, more on the property tour focus, really getting people there so they understand it, such as, I mean, people understand like assisted living, for example, but do they really understand how the financials work, how you make these investments happen, how they're successful? Same thing with retail, office in today's space. So I think you can apply a lot of the same principles across the board with slight tweaks here and there. But again, depends on the market, the asset, everything else.
Nice. And do you generally recommend people focus nationally or just within their town, within their city, state? How big of a net do you generally recommend people toss?
I think nationally or picking 5 or 6 large national markets is a great place to start. Um, Sometimes it does make sense for people to stay in their market, but generally speaking, advertising and marketing to a broader audience doesn't hurt.
Okay. And then let's talk about the actual once they've decided that they want to invest in your deal. What is the process that you run them through from that point forward?
Sure. So once people have committed to the deal, you've built that relationship, they're ready to wire money and sign their documents. That's when the investor servicing piece really becomes important to get them over the finish line with a smooth experience. That's where a great investor portal and CRM comes in, right? So making sure that once they log into that investor portal, it's really easy for them to sign the documents. They can read through the PPM if they haven't already, and they know exactly where to send their funds very quickly, very easily without any hiccups. And having a team member as well, guiding through that process with them, if needed, is going to be important as well. So the last thing you want is to have maybe an older investor who's not quite as tech savvy stuck in this process and no one to help them walk them through it, right? So having not only the team on board available to help, and then having great tech system in place to make it as easy as possible. Will really kind of set them up for success once they've said, okay, let's do this. They feel good about going through the process, and they feel really good about the communication along the way. Once the funds come in, making sure that you're letting them know that the funds are in. Hey, here's what's going to happen next steps. We're planning on closing here. Here's our contact information if you ever need anything. And just really going above and beyond on the customer servicing part of it will really help with reinvestment, referrals, everything else down the road.
Makes sense. Do you have an investor portal that you suggest?
I really love Invest Next. I think it's pretty user friendly from the investor standpoint. It's a great interface and it's really easy to set up, and they have a lot of great features as well.
I have looked through a ton of I haven't looked at Invest Next, but I've looked through a ton of different portals, and I just feel like their price is just, I know that they are providing a product for a very niche high ticket product, but it's just they're usually charging like $1,500 a month. It's or whatever. It's just way higher than I would expect. And so I'm
Yes.
just waiting for a product to come out that's reasonably priced.
I
Invest
think
Next.
Invest Next might be lower, but I'm not sure. It might be lower though. But yeah, they are expensive and they are investment. But if you're really planning on growing and scaling, it'll be worth it.
Yeah, makes sense. Let's talk about communication once the deal has closed. They've wired in their money. They are in the deal, and now they're just kind of twiddling their thumbs, wondering how everything's going. What is the communication cadence and systems that you suggest people build once they're running the deal?
Yep. So a low cost, really easy to use and pretty robust option to hold all of these communications and automate them going forward would be a HubSpot account. I think it's $20 a month for the lowest level tier, but that should get you pretty much everything you need until you really grow larger. So starting with closing updates, right? So if you're going to let the investors know when the closing date is scheduled for. If there are any changes, delays, early closings, whatever it is, make sure to update them there. And then I always really like monthly communications moving forward. So yes, they're passive investors. Yes, they don't want to be actively involved, but they do appreciate seeing what's going on, making sure the GPs are still around, actively operating their deal month to month. So I recommend monthly communications there. Any financial updates, if it's a value add or development deal, any construction or renovation updates, sending pictures over, whether it's a good, bad, indifferent, boring update, whatever it is, send it over. Always be transparent. Always give as much detail as you can, because that'll help the investor feel like they're involved. They're not left in the dark, and it'll really go far. So I'd say monthly communications from there, especially once the deal is active. If you want to throw in a quarterly webinar to talk face to face with your investors, for them to ask questions, that's always great as well. And then maybe every 6 month, greater company update with what's in the pipeline, who's new on the team, what are our goals, are we sticking to the plan, that kind of thing.
Yeah. Yeah. The absolute worst thing you can do is think that your job is done once the money is raised. I know that the real focus that you should be doing is making sure that the deal works. That obviously should be your primary focus, but it is really bad for the relationship with the investor if you stop communicating with them. Even if the deal is going really well, you're like crushing your goals, you're hitting all your metrics. But if the investor is in the dark and they don't know what's happening, and they're not just getting a little update here and there, they always assume the worst. And it's just human nature. It's just kind of how we work. And so just sending out a monthly email, it doesn't have to have a ton of detail, but just something that just shows them that you're working on the deal and that it is still moving forward. It goes a long way. So yeah, great suggestion. I'm going to take that opportunity. I looked at the clock. It looks like we have run it down. So I'm going to move us into the quick question round. Are you ready?
All right.
Cool. It starts with books, or it doesn't have to be books. Could be any form of education. Could be a conference that you've gone to, movie you liked, anything. But I need 2 recommendations, one for general life wisdom and then one for real estate.
Awesome. So for real estate, I really like the Hands Off Investor book. I think it's by Brian Burke. It's pretty dense. It's pretty thorough, but I think for passive investors specifically, it's a great read, because passive investors often overlook some details, or they might not understand all of the things that go into an investment when they're looking to do due diligence on the sponsor and the deal itself. So I think it really provides great insight into what they should know before placing their capital with somebody else who, they should just be really informed. Non-real estate, I have 2 suggestions here. One, the book Die with a Zero is great. It really just helps you remember that, yes, you're investing, you're saving for a rainy day and whatever it is, but it also reminds you to enjoy life now. And you just never know what's going to happen the next day. So don't forget to have fun and invest in yourself and spend money frivolously here and there just to enjoy. And then a mastermind that has really changed my life and I love is called the Financial Journey Mastermind. It's with a guy named Keith Blackborg out of Dallas, and the education, the people, everything in that mastermind has really been amazing, and I would highly recommend it. So
cool. Good recommendations. All right, let's next question is for your younger self. Let's go back to the Lauren who was just getting hired so many years ago as the second employee at the storage company. Go back to her, look her in the eye, give her one piece of advice moving forward.
I would say don't be afraid to invest in yourself, whether that starts with just reading more books, listening to more podcasts, or attending expensive masterminds, or whatever it is. Just invest in yourself. It'll always be worth it. You can always learn more, and it's going to be great.
Great. Love it. Next question is about the U.S. It is a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Oh, that's a great question. I still think Texas has a lot of opportunity. So maybe call it DFW. They've got some great opportunity, or maybe the Carolinas. I know that's 2, but yeah.
Yeah. DFW. We own a couple out there, and I love that metro. It is for storage at least. I feel like it's a little overpriced. I haven't found a good deal in a while, but I'm
Yeah.
sure I'm sure Spartan's doing a lot better. All right. Next question is about finding deals. We're actually going to change it for you. It's going to be finding new investors. It does. There's a lot of ways to generate leads, but there's always a favorite one. So, what is your favorite way to find new investors to invest in deals?
I love going to events that aren't necessarily, or conferences that aren't necessarily investment focused, but they're focused on, say, tax and asset protection,
Hmm.
right? Somewhere where investors will be, that they're not exactly there to learn about real estate, because a lot of those real estate conferences right now are overrun with other GPs and the secret's out. So kind of finding that blue ocean in an unexpected place is my favorite way. And obviously in person, because that's going to be the best way to find new investors.
Yeah. Do you for those conferences, do you like rent a table, or do you just go out there and start shaking hands?
Yeah, usually I don't rent a table. I think it's best to not be stuck at your booth. I think it's best to go out, mingle as many people as you can, maybe host a private happy hour or a coffee meetup through the networking app that they provide, and that's going to give you some great results.
Cool. All right. Next question is see, this question we've already covered it because the entire podcast is about it. It's about your favorite way to raise capital. We've already talked about, so we're going to skip that one. Next one is about lessons learned. Not every deal we goes the way we expect it. A lot of times things go a little sideways. So, what was a capital raise for you that went a little sideways, and then what was the lesson you pulled from it?
Yeah. Let's see. I have never been part of a deal gone truly bad, which is awesome. I mean, some things have missed pro forma or gone off the side for, 3, 4, 5, 6 months. So I think the most important thing there is communication. It's tough to communicate bad news because the investors aren't going to be happy, and you might get yelled at and you feel bad because it's their capital on the line. But it's really important and it's the right thing to do. So no matter how hard it is, just really communicate, really stay on top of it, and have a plan of action in place to get that deal back on track.
Cool. Communication is key. All right, that brings us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Sure. So you can find me at equity-elevated.com or Lauren at equity-elevated.com for email. And if you want to reach out to me, you can expect some tips and tricks on best way to raise capital. I really focus on systems, processes, tech stacks, marketing for my capital raise clients.
Awesome. I'll put that link in the show notes. So if you guys want to reach out to Lauren, just click a little more in the description. It'll pull down that full description. In there, you can find her links. All right. That wraps it up. Thank you very much for hopping on the show.
Thanks so much, Gabe.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.